Hello, motherfuckers. What a fucking day. What an absolutely amazing day today was. New local high for AMC, breaking that 1116 local high that we saw previously in the 2-week bull run. SPY continued to the upside even more today. Said fuck a pullback. We're climbing up. Everything looks amazing. Everything is lining up. Absolutely no complaints. I have a shit ton of charts to talk about today, so I'm not going to waste too much time. We'll jump right into it, starting with the symmetry on SPY, which I've covered a lot. I've been covering this chart for a very long time, the symmetry of this chart. So, it's the usual shit. The blue is the middle, the red on both sides, you're rejecting below 380, rejecting the top trend line, and then the green, you're down to 380 on both sides. And then a climb to 460, and then a downtrend, a rejection at 460, a downtrend, bounce off the trend at 418, bounce off the trend at 418, up to 435, roughly, the yellow box on both sides, then knifing on both sides down to that 410 landmark. On the right side, it came a little bit lower. The 460 top was a little bit lower, the cup and handle was a little bit lower, the 410 landmark was a little bit lower. I said on Friday at 409 that the bottom was in on SPY. Symmetrically it was in, and looking at the macro side by side, the bottom's in. Expect upside all week. So from 409 on Friday to today Friday, 435. We actually touched 436.50, I believe was the high of the day today. I said in my when I was covering this at 409, the next thing we're looking for, short to midterm, is a move to 450. I didn't expect to be this fucking close a week later, touching 436.50 today. But this thing is just shredding to the fucking upside here. The next landmark that we have for SPY is roughly 450, the equivalent right here, this green box compared to this one here. More than likely, this will top out a little bit lower than we saw here. So somewhere around 450 to 454-ish, and then one more pullback to 420 on both sides, and then all-time highs. This looks amazing. Absolutely no complaints. What a fucking week for SPY. We're looking for more upside. Potentially, it just keeps going. I mean, potentially you see just continued upside next week to 444 before you see any kind of pullback. 444 roughly, then pull back to this trend here at 435, 438, and then you bounce up to 450 from there. But we're looking for more upside here. So checking off 450 up here, pull back to 420 one final time, and then all-time highs is what we're looking for on SPY. This looks amazing. Now, AMC's macro perspective from IPO. So starting at IPO, your January and June equivalents, green and yellow. And this is one macro here, your January, June, your descending wedge, flat portion, and then a new macro starts right here. So again, January and June equivalent, descending wedge, flat portion, and we're at the end once again. We also met this macro trend from IPO, which acted as support pretty much up until the flat portion. So bouncing off of it as support over and over until the original flat portion where you break below and start rejecting it into your new macro. You reclaim the trend as support, claim it, retest into your June squeeze, and then play out the macro the exact same way, descending wedge all the way down to this macro trend again. So the breakout of the wedge, the retest on the wedge, also retesting the macro trend at the exact same time and holding it and bouncing off as support. This looks amazing. Again, this macro trend is meeting zero roughly at the new year. This trend will be relevant, very soon. So that's pretty much it for this. AMC is repeating the macro the exact same way that we saw previously. January equivalent, June equivalent, V-shape. January equivalent, June equivalent, V-shape. Macro break gap down, descending wedge, green, red, blue. Green, red, blue. At the end of the blue, you drop to the flat portion, play it out, and then you squeeze into a new macro. That's where we are. We are at this bottom right here. I mentioned multiple times the support and the resistance of this descending wedge The point at which they meet is your third bottom all-time low, the bottom, from which you form an uptrend into your squeeze and a new macro. So again, support, resistance, the point at which it meets is the bottom, the third bottom all-time low, from which we're forming an uptrend now, and we're looking for a squeeze and a new macro. So this looks great. The next slide, we're going to be looking at the flat portion of the January 2021 cycle versus the flat portion of the current. So this right here versus this right here, pretty much the end, the reset pattern. I'm theorizing this, more or less, this pattern is just a reset pattern for the algorithm. So we'll get into that now. And here it is. I cover this every day. I've been covering this since day one on YouTube. So on the left is 2021. On the right is current. Dropping down to the flat portion here, very choppy. You gap up into your double peak move, coming down to your second bottom, which is a higher low in the daily. On the right, same story. Dropping to your first bottom, choppy, gap up, double peak move, coming down to your second bottom now, which is a higher low in the daily once again. From your second bottom, you gap up once again, and then get into the tri-peak. 1, 2, 3, 1, 2, 3. And then you knife from the third peak of the tri-peak down to your third bottom all-time low on both sides, from which you form an uptrend to a point where you reject, you get the chop zone, and then the January 15th candle right here is the end of the macro. So again, coming down to our third bottom all-time low, the uptrend to the point, the pullback, the chop zone, and then now we are in the middle of the January 15th candle, actually forming a new local high, higher than this high right here. This 2-week bull run that we had to 1116, we broke that high today. This looks amazing. This flat portion, as well as the movement, as well as the EMAs, it's playing out in the exact same amount of time. It's 1-to-1 right now. In the 2021 cycle, from the beginning of this until your peak, January 27th, 342 days. In the current cycle, from the beginning of this until we're currently sitting right now, 337 days. We are now 5 days away from being 1-to-1 with the previous flat portion of 2021. Ask yourself, how can that happen? How could that possibly happen? If not, we're just running on a loop. Fractals are fractaling. AMC is playing out the macro the exact same way. I wish I had the tweet from Adam Aaron. When Dumb Money came out, he was referencing the apes and the story. You know, the story. He was, I forget what he said. Something about, you know, you're experiencing the same thing that you pretty much saw in the movie. I forget exactly what he said. But this is the story. We're currently playing out the macro the exact same way as we did previously, leading up to Dumb Money, the squeeze in 2021. We're playing out the macro the exact same way once again. We are now 5 days away from being 1-to-1 with the flat portion, with that 5th day landing on November 8th earnings. Weekends are included in this, so by Monday open, we will be 3 days away, which lands on a Wednesday. Ironically, because both squeezes that we saw in AMC, January and June, did land on a Wednesday as well. So that's that. This looks amazing. I've been tracking this for a very long time, pretty much since I've been on YouTube, tracking the flat portion. The movement, the EMAs, the indicators, it's all perfect. The only difference here is the third bottom all-time low was very drastic, and I've gone over the reasons multiple times. Triggering stops, shaking out paper hands, meeting ape at the exact same price to the penny, going into the conversion, filling all of the open gaps to the downside. There's multiple reasons. So that's it for this. Now getting into this zoomed. So what we're doing with the next slide is we're looking at the third bottom all-time low of the previous cycle versus the third bottom all-time low of the current cycle and the uptrend off of it up to January 15th right here, which is where we are now. So looking at the zoom now, here it is. And this is tracked perfectly. And just to give you a quick idea, this video is going to be long. So just to give you a quick idea, if I could click on anything. Coming up to the rejection point, down to the chop zone here, sideways, you know, just going down the slides, progressing through this, just chopping here, chopping, looking for January 15th. This whole time, we're still sideways here, looking for the uptrend. To present day now, here we are. And what we were looking for here, once the chop concluded, was January 15th, the daily candle, which breaks you above this rejection point here. You break above it, you knife back into it, and then you gap up. That's the end of the macro right there. Today, we broke above this range. Now, on the micro right now, we're in a very tricky spot. There's a few different possibilities here, what this move actually was. And I'll go over it really quickly here. And then I have some scenarios for next week. Starting with this, where this could have possibly been this wick here that we were looking for previously. The first wick. And now coming down here, we would be in this doji candle. And now next week be looking for this move here to the upside. Early on next week looking for this, and then knifing into your V, which would end on earnings day, intraday. The rest of this would play out into after hours. God knows what the fuck was going to happen after hours, what news we're going to get for AMC, but we're expecting our macro break and a ridiculous move to the upside. So it's probably going to be some big news. The other perspective, and I went over this yesterday, it was possible that this move here, it didn't quite break the range. Like you see here, and I mentioned we didn't get the wick. The body of the candle is actually lower than this range. The wick is the only part that goes above. So it's possible that this move was this pullback was the doji here, and then this move, the top of January 15th, is what we just experienced today. And again, you know, this wick is pretty drastic, but the body of the candle, it breaks above the range, but very slightly. It's very possible that's what today was. And then the pullback that we saw end of day is now we are in the middle, in the process of V'ing the V of this move, the V of January 15th, which is the end of the macro. This is the end right here. Right here is the end. So we're there. We are there. And really quickly, here's just another perspective, zoomed in a little bit more. So this is the rejection point versus the rejection point, dropping down very choppy here, dropping down very choppy here before you start the uptrend. And then you get your 1, 2, and then your V. And it's very possible what we just saw was this 1, 2, and now we're in the process of the V. So it's possible next week we just see red, Monday to Wednesday. It's possible we're just sideways on Monday, maybe even sideways on Tuesday. I don't know what that would look like, maybe dojis. It doesn't really make too much sense. But then knifing even further on Wednesday, intraday, heading into earnings where we gap up. It's also possible that this 1, 2 was just this first candle here, and now we're in the process of the doji, and we'd be looking for one more candle of upside early on next week, probably Monday. And then Tuesday, Wednesday would be the knife and the V. And I have a pretty rough sketch here. And here it is. And it's just a crayon chart, but the scenario where we see more upside, and you know, January 15th plays out every day. So you could see it here when we were chopping here, when we broke the chop zone, you get your 1, 2, your knife, and your V. And then you get your 1, 2, your knife, and now we'd be looking for a V. And now Monday would be 1, 2, potentially that goes into Tuesday, and then Tuesday you start knifing into Wednesday, and that's what we'd be looking for, a pullback to below $10 range. Either perspective, we're looking for a pullback to low $10 range, by the way. So it's possible early next week we see this upside here, followed by, that would be early on, and then we'd see downside heading into earnings roughly to that low $10 range. This was the other perspective where this would have actually been the top of the January 15th candle, and now we would be in the process of the downtrend in the V, which I don't really know how this would take 3 days. That's why I'm saying I don't really love this scenario, because we would pretty much just be very sideways choppy for Monday and Tuesday, which it would look like a back-to-back doji on the daily, which doesn't really make too much sense to me. And then just a knife and a V on Wednesday. I don't love that so much. I think there might be more upside here. I think early on next week, we might actually see a little bit more upside. And then Wednesday, we just knife. We'll have to see how it plays out. I think Monday would give us a very good idea of what we're going to be looking for going forward. So that's that. The financial freedom trend line. And this is your third bottom all-time low of January 2021. On the left, your third bottom all-time low of the present cycle on the right. The uptrend off of it, up to the trend. The uptrend off of it, up to the trend, where you reject down to your chop zone. So you reject down to your chop zone. In both cycles, you're fighting for the 20 EMA on the daily, right here. Right here you were, and right here you were. Before you claim it, and you break this trend. And that is where we are. And again, the two scenarios here would be, number one, this movement here was just this candle and the doji. Early next week would be looking for this, and then the V. The other scenario was this was the first, this candle here, and the doji right next to it was the pullback. And then today, the new local high that we saw today was actually this candle, and next week would be looking for the V. Regardless of either scenario, we are looking for red next week going into earnings. We might see green first, we might see green early on and then red. We might just see red Monday to Wednesday, but we're looking for downside to complete the macro. The macro will end with downside, followed by a gap up. So this looks amazing. This is tracked perfectly from the bottom in September all the way to where we are now. This is tracked absolutely perfectly. So that's that. This was zooming in on the 1 minute chart. So this is January 15th versus the present movement that we're seeing. And I mentioned yesterday when we pulled back to this trend, we were looking for a pop to 10.6, 10.7, not quite as high as the high we saw here, followed by a double bottom, a pullback, and then upside. Now, we never really got the pullback here. It's possible this 10.27 was the pullback, and you get a little pop off and then sideways, a little pop off and then sideways, and then you get into the run, and then you get into the run. And you even have the same kind of move here. You get one peak, you get a W here up to the top, one peak, a W here up to the top, and then you start getting into the downtrend. So it's very possible next week, Monday to Wednesday, we're just red. It is also possible that, that was just your 1-2 V that we saw. I was just going over here, your 1-2 V, your 1-2 V. We might get one more iteration of that. More upside to that $12 to $14 range, and then we get the real V, a pretty nasty pullback to low $10 range. It's also possible that we just see red all week. So that's that. Now getting into the Bollinger Bands, once again, the Bollinger Bands have only done this 3 times. This crazy ass, it opens to the downside like crazy. It's only done this 3 times since IPO. So here's from IPO. The Bollinger Bands are pretty normal here, wrapped around the candles all the way through the chart, all the way through the flat portion, pretty normal stuff. And then right at your January squeeze, right before it, the Bollinger Bands open up like crazy to the downside. At the same time, the volume spikes and we squeeze. Then the bands close up again, and then into your June run, right before it, the bands open up like crazy to the downside again. The volume spikes again, and we squeeze again. And the bands close up again, all the way through this until present day. Bands have opened up like crazy to the downside again. At the same time, the volume is spiking. This looks amazing. RSI OBV volume update. So here is the macro perspective of AMC. So here is your flat portion, your January peak, your pullback ascending W, your June peak, the flag, the downtrend, the knife, and the V. So decreasing volume through the downtrend this whole time until the end of the macro, where the volume spikes, all-time high volume in January. And then from January all the way through the macro, descending volume as we're pulling back. Until recently, the volume is picking up and pretty much sitting at all-time high levels once again. While we're in the process of forming the macro V, which is the end of the macro. So we're looking for a huge spike in volume here heading into our squeeze. At the same time, from $400 down to $7, the green volume has been outweighing the red all the way through the macro. All the green volume spikes that you see here are outweighing the red all the way through this, all the way through the macro. And with that being said, OBV is at all-time highs currently on the weekly. So before AMC was really a full-fledged meme play, OBV was pretty flat all the way through. you leg up in January, you leg up again in June, and then you're pretty much hovering here at all-time high levels. You have a descending trend here in red. Recently broke out of it, tested on it twice, confirmed, bounced off, and a new all-time high OBV. And then again this week, another new all-time high OBV. OBV is still climbing. At the same time, RSI, which is actually starting to curl up now, but it's still sitting at 32. So again, on the weekly, the RSI, there is plenty of room to the upside here, which is great because we're looking for a squeeze anyway. So this setup here is perfect. All-time high OBV. The volume is sitting at all-time high levels. We're in the process of our macro V. The weekly RSI is pretty much oversold still. Could not ask for a better setup here. That's that. Now, the Fibonacci spiral. And this is from IPO. So your first touch point at IPO here through the downtrend. Your second touch point at the flat portion, the original. You get your January squeeze, you get your June squeeze, the flag, and then downtrend. So the resistance of the downtrend here, this white line, it's also the resistance of the Fibonacci spiral. So rejected here, halted, rejected here, halted, rejected here, halted, rejected here, halted. Then you knife into your V, which also actually retests on the Fibonacci spiral. So there's your breakout of the spiral right here. Halted, come down and retest the spiral. This is also our macro V. This looks amazing. Now, getting into the January 15th macro, and this is updated now. So again, we're looking at 1 minute candles here on the left versus the macro on the right. This is 1 minute candles, not even 1 day of price action versus 3 years of price action on the left. I mentioned multiple times every single day for AMC is January 15th. Look at the daily price action today, it's January 15th. Every single day is January 15th. This pattern plays out every day to give you the big picture that we're looking at. This pattern is playing out on every candle, every weekly candle, on every time frame. Over and over again, this has been playing out until we get to where we are now, where you can actually see the macro perspective in full, which is where we are, the end of the macro. So you have your W here. This would be the flat portion equivalent, which is where we are here. Your January squeeze, pullback, ascending W, pullback, ascending W, June squeeze, flag, and then a downtrend, and then a downtrend. 4 touches on the top, 4 touches on the top, and then knifing into your V, knifing into your V. This pattern plays out on every time frame, every single day, and to give you this, to form the macro, which is the exact same thing. And we're at the end of it, in the process of forming the macro V now. And once this is fully formed, theoretically, you can't see the candles up here, but your micro fractal break, you gap up over the entire range. The macro fractal break, we're looking for the same thing. I'm looking for the same thing, is a gap up over the entire range. So that's that. Zooming in on it a little bit now. So this is just zooming in on the downtrend. So your 4 touches up top, your 4 touches up top, your 3 bottoms descending, your 3 bottoms descending. From the third bottom here, come up to the trend, reject, higher low, reject again. Third bottom, up to the trend, reject, come down, higher low, reject again, knife into your V, knife into your V. This week's weekly candle looks amazing, absolutely no complaints. And that's it for that. Now I mentioned multiple times, it's possible that we don't have to actually come up to this trend at 1380 to complete the macro. It's possible we do, it's possible we don't. This is 1 minute candles. This is 1, 2, 3, 4, 5, 6 minutes of price action here versus 3 fucking months. So the wicks here on this top trend, I'm not sure if they have to be perfect or not. It's possible all we need was that move today. It's also possible we have more upside early next week, like I mentioned previously, to hit this trend, and then you knife into your V on the micro, and that's it. So the scenarios with that, it's possible this trend, it doesn't have to reach 1380, this yellow line like we saw previously over here on the micro level. It's possible that this white line straight across here was good. It's also possible that there's just a descending trend here, and that would be the trend, and we just came up and touched it today. it doesn't really matter, to be honest. It really doesn't matter. So it's possible we see more upside on Monday. Possibly we don't see more upside on Monday. Regardless, earnings, we're looking for a ridiculous move to the upside. So that's that. Now, I covered this yesterday, and really quickly I'll cover this again. So this is the original flat portion here. Your 1, 2, and 3, your squeeze, your January squeeze, your June squeeze, the wedge, and then again falling through this trend. I mentioned in yesterday's video, this white trend here is the floor of AMC, 1380. So we've only broke below this 4 times. This was the 4th time now. And each time you end up climbing back to this trend in white, 1380, and you gap up. So you gap up over it, and then you break back through it, you climb up to 1380, gap up once again. Then you fall through it again, climb back up to 1380, gap up again. This gap is your macro break and takes you into your squeeze. And that is where we are now, falling through the trend again in the process of climbing up to 1380. That's why I mentioned potentially on Monday we see just a crazy move to the upside. And then Tuesday, Wednesday, we get the knife and then we gap up. It's very possible. It's also possible we just see downside Monday, Tuesday, Wednesday, a slow, choppy downtrend into earnings, and then we gap up. But this looks great. So that is pretty much everything. I have a few more charts, and this is going to be the Fibonacci extensions because I haven't talked about this in a while, and I want everyone to understand where my price target of $1,400 is coming from. So really quickly going through this, and we'll start with the January squeeze here. So we're running a fib here from bottom to bottom of the flat portion. The January squeeze topped out right in the middle of the 2618 and the 3618 fibs. So right in the middle, buy button was also removed. Potentially this might have hit the 3618, but in between the 2618 and 3618 for your January squeeze. Your June squeeze, running it from the bottom of the flat portion to the top of the January to the bottom of the pullback now. The June squeeze topped out at the 3618 fib on the fucking dot. Right at the 3618, that's where we topped out. Now, this is a fib pull for the macro now. So from the bottom of the flat portion to the top of June to all-time lows. The 3618 fib is $1,396.44. $1,400. I would say a safe price target, if you're really trying to be conservative here, would be somewhere in between the 2618 and the 3618 fib. So anywhere from $1,000 to $1,400 is a very safe spot to exit any position that you're looking to get out of. Nothing I ever say is financial advice, but in my opinion, between $1,000 and $1,400 is a very safe spot to get out. Theoretically, we should be gapping up past all-time highs anyway. It's possible we find some resistance at the 1618 fib at 628. So just to give you an idea of what this might look like if we gap over all-time highs. So we gap over all-time highs at 390 and we get a rejection at the 1.618 fib, $630 more or less. It's possible you reject there and you come down to 390 and bounce off of the macro, the all-time highs as support. So you gap up over all-time highs, probably reject the 1618 fib, come down, bounce off of 390, the top of the macro, and then you would get the move to $1,400 or wherever we're going to go. It's also possible this shit's just straight lines. This is going to be unpredictable. You can track the macro to a point, but once we get our gap up, our macro break, what follows, the volatility, the volume, is going to be absurd and cannot be predicted. The only thing you can do is just run a fib pull. That's it. We have targets that make sense. There was people commenting on my video yesterday talking shit because $1,400 is nothing. That's not MOAS. That's a fucking ridiculous move to the upside. $10 to $1,400. That's a ridiculous move to the upside. Nothing I ever say is financial advice, but in my opinion, if you're holding for 100K, if you have that number 100K in your head and you're dead set on, I'm not selling until I see 100K, That is just a stupid decision. Very dumb. $1,000 to $1,400 is a very, very safe spot and probably a smart spot to get out. If you want to leave runners, leave runners. I'm leaving runners, but most of my positions will be gone in this range, $1,000 to $1,400. So that's it for that. Again, nothing I ever say is financial advice. And really quickly, GameStop's macro. I covered this probably a week ago or 2 weeks ago. I'll really quickly cover it again. So starting at IPO, knifing to your all-time low landmark from which you V out of, you climb up to this yellow trend, which you break above, that's your macro break, into your squeeze. This really isn't a squeeze. This is before GameStop was a meme stonk. Very low volume back here, so not really a squeeze. It took a while to play out. This would be the equivalent of the V shape, and then you get your 1, 2, and then you get to the downtrend. So you get a W here, you fall down, you get another W, which ends with another all-time low landmark from which you V out of, and this is your macro break line here in yellow. You break above that, and this squeeze was just pretty much instant, and it's because of the volume. The more volume that there is, the more volume injected into the stock, the faster this is going to play out. So you can see here the volume on this run is pretty low. So this took a while to play out. The volume here is very high. So this just rocketed right to the top. And then again, that's your all-time high, your V shape. You can't even see it because it was pretty much instant. Straight down here to this green line, back up. Your 1, 2, and then you get to the downtrend like you saw here. W in the yellow, fall down even further. Another W ending with an all-time low landmark. GameStop, green week. So solid week for GameStop. And more than likely how this plays out for GameStop is when AMC sees its macro break, GameStop more than likely will at the same time, at the exact same time. And more than likely, GameStop will also gap up past all-time highs, the same way AMC does. And the volume on that move is going to be insane. So it's going to play out even faster than we saw here. Just like with AMC's macro, I don't have the volume here, but the volume on these runs was very low. And the volume on these runs was very high, which is why they played out faster than these did. As the macros are progressing, so here's the first macro, and then here's the second macro. As the macros are progressing, the volume is increasing, so the macros are playing out faster. And GameStop is another perfect example of that. So here's your macro, the first one for GameStop, right here. Took a very long time to play out because the volume was very low. Then on the squeeze, volume spikes, and then the downtrend. As a matter of fact, this downtrend that GameStop has been red since June. GameStop has been trending down since June. Months, just trending down. The volume on GameStop, and this is a 5-day chart, I believe. Yeah, 5-day. The volume on this pullback on GameStop is pretty much the lowest volume that GameStop has ever seen. It's pretty much all-time low volume on this pullback here, which is fucking very bullish. Heading into the all-time low landmark on all-time low volume, this looks fucking amazing. The meme basket's about to squeeze again. AMC, GameStop, you fucking name it. If it's in the meme basket, more than likely it's going to squeeze. The market is perfectly synced up. And, you know, there is very serious potential. And, you know, nothing I ever say is financial advice. But there is a very good chance we are squeezing next week. 1-to-1 lands on Wednesday, November 8th, earnings of the flat portion. The tracking, you know, this is tracked perfectly from the all-time low landmark, the movement up, the pullback and chop zone, we just broke the local high here. So confirmed, we are in January 15th right now, breaking the local high here. It's just a matter of how this is going to play out for the next 3 days. Do we get one more spike to the upside, to that $12 to $14 range? It's very possible. Honestly, I'm kind of leaning we do, just because if this was actually the top of this move, I don't see how we go Monday, Tuesday, Wednesday, just playing out this. Unless it's going to be a very drastic knife, which, you know, it's possible we have to retest this trend, the financial freedom trend line. it's unlikely, but it's possible that we have to retest this trend, which would be low $9 range. Very unlikely, and I don't think that's gonna be the case. But if we're not gonna see any more upside, and we're looking for the V Monday, Tuesday, Wednesday, I don't really see how this plays out unless it's just a very slow, choppy Monday, Tuesday, a very slow, choppy downtrend Monday, Tuesday, and then Wednesday we just knife and V. I'm leaning more on the side of we're going to get one more iteration of 1-2 to the upside, $12 to $14 range, and then Tuesday, Wednesday, just knifing, finishing up the macro, and then after hours on Wednesday, craziness. So that looks good. Just going through everything, just a quick summary. Bollinger Bands, this has only happened twice. Prior to right now, present day, this has only happened twice. The bands opening to the downside like this. The first time it happened was in January while we were squeezing. The second time it happened was in June while we were squeezing. The volume was spiking at both those times, and now it's done it again as we're looking for a squeeze. The Bollinger Bands opened up to the downside. The volume spikes to the upside. That looks amazing. The Fibonacci spiral along with the macro January 15th. So here is your W. Here's your January equivalent, pullback, ascending W, June, flag, pullback, 4 touches on the top, hold it every time, knife, and V. Also breaking you out of the fib spiral and retesting on it. That looks amazing. Looking at the micro, January 15th daily versus the macro, 3 years of price action, it's the exact same thing. We're in the process of forming the macro V. It's possible it's already done. It's possible that we finished it up this week with this this weekly candle here. It's very possible. This chart, breaking below the floor here, climbing up to 1380, gap up, climb up to 1380, gap up over and over. That's what we're looking for again. We're looking for another macro break here, another squeeze, gapping past all-time highs. That's pretty much it. I think, I covered everything. The RSI volume OBV on the weekly is at all-time highs. Another new all-time high on the weekly OBV this week. RSI is pretty much still oversold, curling up a little bit. Volume is at all-time high levels. We're in the process of the macro V. It looks amazing. I'm already 40 minutes into this video. And again, $1,400, I'm not going to tell anyone what to do, but you guys know what my price target is. So I think that's it for the video. This is a very long video, so I don't really have to drag it out. At the same time, GameStop looks amazing. GameStop is ready to squeeze as well. All-time low volume here on this pullback. And this is your all-time low landmark as well, from which you V out of into a squeeze. So that looks great. And then again, SPY, perfectly symmetrical move. A couple more landmarks here symmetrically before all-time highs. Market synced up. Everything's bullish right now. Besides banks, maybe. So I think that's it for the video. I feel like my energy might have been a little low here. I had a long day, pretty tired. But in my head right now, I am fucking locked in. I am absolutely fucking locked in. And everything, trust me when I say this, everything looks amazing. The price action this week was fucking perfect. The indicators look amazing. Tracking wise, we are at the end of the macro. I could show this over and over again. We are at the end of the macro, in the middle of the macro V. What's coming next is a gap up past all-time highs, and it's lining up for earnings once again, 1-to-1 with the flat portion. This is absurd in and of itself that the flat portion has played out 1-to-1, but that 1-to-1 day is November 8th earnings, a Wednesday, just like January and June peaking on a Wednesday. 1-to-1 lands on Wednesday, November 8th, which is earnings. That's it, guys. I'm not sure if I'm going to be making update videos next week. I might just not be going to work. So I might be streaming next week. Streaming Monday, and then Tuesday and Wednesday might be a little bit different. I'll still be streaming, but it'll be a little bit different. So that is it for the video. Hope you guys enjoy your weekend, and I will catch you guys next week. Let's fucking go. It's time.